Well, top of the morning to you folks out there. So I'm already getting questions. Well, it doesn't look like the war's ending anytime soon. I'm going to show you instant market reactions. Over the last half hour since I've been putting this together, there's a lot of movements in the bond market. So if you're here watching this video, thank you so much for joining me this morning. My name is Dan Frio. I'm the host of the Rate Update. My goal is to help explain to you guys what's going on with mortgage rates today. And if you're a homeowner, home buyer, what should you look at kind of down the road? So the first thing, if I show you this right through here, Iran stops negotiations with the U.S. And then there was some bombing yesterday. That's not good news when it comes to mortgage rates. So if you go over through here, here's the other thing. April new home sales missed estimates. They're down 11%. So we most likely are going to have mortgage rates spiking from here, and we have new home sales plunging. If you're watching this video, you're a homeowner, home buyer. Let's figure out, folks, what in the world's going to go on with these things today. So thanks for joining me today. If you guys got any questions, please leave them over on the side. Give me a thumbs up as you guys come in. Let me know if my audio is good, because sometimes it's in one ear and not the other, so I'll try to adjust that on the fly. But without further ado, folks, let's get over to this. So here's where mortgage rates, they're going to start this week on Monday, June 1st. So right through here, 6.56%. I've been saying during the Iranian conflict, my thoughts were rates were going to be about 6.25, 6.5. Well, you remember we were down at like 5.99. Okay, so then I thought rates, they're going to go up 0.5%, but this is lasting a lot longer than I even thought. Let me know what you guys think. But what we like to do each day on my channel is we know where rates are, so let's go over and figure out what they're going to do today. So without further ado, let's start with the chart. So here's where bond market, it's getting clobbered. Okay, so when I started, prepping for today's video, here's where things were, right about here. They were down 7, 8 points. And I'm like, okay, there's, it's coming back to neutral a little bit. There's a huge gap here. I'm going to get to that in a second. Then all of a sudden right through here, boom. And I was even watching the Dow Jones. I got TVs everywhere. And even the Dow Jones and the equity markets went from green to red. What's going on? Well, let's get over to the headlines that we're seeing right through here. Here's where here's where it all is. Oil. You're seeing oil now up. Now let's go down up 7% now to $93 a barrel. What happened? Well, Iran came in just recently, and they said, we're closing down everything. So if you think that's good news when it comes to the markets and everything else, we have something in store for us today. So when you usually have mortgage or oil up, you're going to have the equity markets down. It's also not good news for bond yields and mortgage rates. So let me go to this. First thing I want to start is right through here. This chart right through here got a lot of people confused. So let me just explain to you guys how this bond chart works. All you have to understand is that over there. If that number at the top is red, that's not good news. That means mortgage bond prices are going down, and that means rates are going to go up. 43 is a pretty darn big move. This is going to be probably at least an 1/8 of a percent to rates. So could we get it 6.7 again? We might test that. So let me explain to you briefly how this works. So here's how any bond works. So I'm just going to go through this. I'm going to fly through it so you understand. Every bond has a maturity value or a price of a bond. So if you look at a bond, it might say its value is $100. Okay, but it depends on how much you pay for that bond to figure out what the yield's going to be. Okay, so that's where this comes into play. Let's say the price is low. So let's say, for example, I'll pay you $50 for this bond. I'll pay you $50 at one point. When it comes to maturity, I'll get $100 back. So I gave you that. What's my return? It's 100%. I gave you $50 and I got $100 in return. This is how all bonds work. So let's see, like I say, when this is green and it's going up, that's good news. Okay, so let me show you how this works. Now, let's say I want to give you a higher price for the bond. Well, let's make it easy. Let's say the $100 face bond, I'll give you $100. Okay, you're probably thinking, Dan, that's pretty stupid. But let's say back when I give you $100 and today it comes to maturity and I get $100 back. What's my return? 0. Okay, so you see when I paid you a lower price, $50, that yield jumped. Well, that's what's going on over here. So as this price drops, yields are going up. So this is probably going to move rates about 1/8 of a percent today. That's not good news if you're a homeowner or home buyer out there. Okay, so the reasons behind all this is oil's up, and right through here, it was pretty cool. When I was prepping for this video, when I was at the main page right through here, along the top was the headlines of Iran is stopping negotiations with the U.S. because of the Israeli strikes, and they're closing down the Strait of Hormuz. So it could be a crazy day today and over the next few days. So pay attention to that. We want to pay attention to oil, because as oil prices go up, that's going to be inflationary numbers are going up. And when inflation goes up, the Federal Reserve sits back and says, okay, high inflation means we need to higher interest rates to cool down the economy. That's kind of how all this stuff works. So let's get over to here. You've been seeing the stock market. Remember, the stock market before the Iranian conflict was 50,000. Everybody even had hats on and stuff like that. And then it came down. It came down about 6-7%. And everybody's like, okay, here's the crash. You realize now we're still in this war, and we're at 51,000. It just hit. So we're 1,000 points above where we were when the war started. Just kind of an intriguing fact for you there. Why? Well, the earnings reports keeps coming in really good. So now we want to really focus in on why rates are going up. So here's earnings reports from last week. They're starting to teeter down now. But if you look over my head, look, Dell came in at 65% profits. Path came in at 15% earnings per share. MDB 48%. OKTA 22%. This one 117%. This is why the stock market's going crazy. Okay, so you got stocks and equities rallying right now, and you also have the oil market doing what it's doing. So let's get over to it. Here's what the Federal Reserve looks at. Here's what the bond market looks at to figure out, okay, where's yields or interest rates going to go? So here's what happens is the Federal Reserve, they control this right through here. It's called the federal funds rate. Okay, it's basically just interbank lending. But they look at these things right through here. So if you're sitting on the Federal Reserve, what would you do? You have PCE, the inflation number that they want at 2. It's never hit 2 since after COVID. We got down to about 2.3 right there, April of last year, and then it's been up and away. It was tariffs, and then they started kind of topping off, and now it's oil. So as the inflation numbers go up, and they continue to go up, if you're sitting on the Federal Reserve, are you cutting rates? I don't care if you're Warsh, if you're President Trump's son at the Federal Reserve, you're not going to be cutting rates. Now, you guys can comment down below as much as you want, but I'll make you a wager. Down below, there's a buy me a coffee tab. If you guys want, I'll buy you a coffee if I lose, and you buy me a coffee if I win. So I'll throw that out there. Unemployment rate, if you look at this, it's been 4.3 basically for the last few years. It tick up a little bit, tick down a little bit. So the jobs market and wages are holding up. So people keep spending and spending and spending, so the companies are doing well, but the inflation numbers are going up and up and up. And if we don't have any ceasefire in the Middle East soon, or at least a complete resolution of this, oil prices are going to stay stickier for longer. And that means interest rates are going to stay stickier for longer, because it's going to take more to get that inflation out of the system. Okay, so let's get over to the economic calendar. What do we got coming down the pike that should give us some inclinations of what's going on, especially this week? Well, the cool thing about this is these were hot off the press, so I don't even know what these are coming in. So let's look at these, and these just popped in at 10 o'clock when we started. So let's go through each one of these just so we can get an insight on this. I'm going to also show you our new website we have. And if you've been with us for a month or two, it's pretty cool, and I'll show it to you. It's going to give you all this information on one website. So if you go to Monday, that's today, we got manufacturing PMI. Over 55 is fantastic. Last reading was 54. They said it was going to be 55.3, and it's 55.1. I'm taking that all day long because it's over 55 and gaining. That means the manufacturing sector is cooking right now. If you got manufacturing starting to cook right now, you got wages that can be paid to consumers. Consumers will then spend, and the economy will trickle from there. Construction spending doubled. It actually went higher than expected. What I was waiting for is right down through ISM manufacturing prices. Now, this is good news. And folks, we just got this. Let me roll it up. Okay, this is the prices of things. Okay, last reading, it came in at 84. Okay, they thought it'd come in at 85. Because prices on the manufacturing side, you would assume are going up, right? With oil and wages and everything else. It came to 82, lower than expected. So, and you got manufacturing PMI at 54. That's good. Month over month spending, that's fantastic. So that's what we got. Tomorrow we're going to get the JOLT index. That gives us a little more bead on where the jobs reports are going. So now let's get over it. The Federal Reserve, they're going to meet in 2 weeks. What are they going to do? Okay, so give me your comments down below. Even with Warsh, who's handpicked by President Trump, he handpicked him because they have the same agenda, and he's saying, okay, rates should get cut if things stay the same. Well, they're not the same. Oil prices keep going up higher and higher and higher, and this Iranian conflict keeps staying stickier for longer, so it's going to be inflation for longer. The Fed's not going to cut. Well, let's see what this chart's telling us. So let me give me your comments down below. Down below, you go to through here, and there's a 99% chance the Fed's not going to cut. Well, they're not going to cut in June. They're not going to cut at the next meeting. They're not cutting until next year. Well, they're not even going to cut next year. They're saying they're going to increase rates. So let's go over two scenarios. This is where I need your participation because I want you guys to give me your feedback to what your thoughts are. So do you think the war is going to be over soon? Let's go to Kalshi. Somebody brought this up the other day. Let's go to Kalshi and see when they think this war is going to be over. But this is where I need crowd participation. Let's see. What would I look under? Economics mentioned, finance, crypto, culture, sports, political. Let's see what political is. Oh, here we go. When will traffic at the Strait of Hormuz return to normal? Somebody's saying September. Now the odds are October. October. Okay, that's a crazy number. Let me see what you guys got. But I'm going to give you some tools here in a minute. But let's go over to any questions that you guys might have. Let's go all the way to the top. So we have, who do we have here? Statler, war looks like it's not going to end soon. So what does this mean? So I'll get to that in a second. What I'm going to talk about is if I'm in your shoes, if I'm a home buyer looking to maybe put in a contract over the next weekend. My neighbor behind me. Now, my neighbor on the side of me sold, if you guys track me, I think it was last October, August, September, October-ish. He put his house up for sale and he sold it way above asking in 3 days. Now, my neighbor behind me put up their house and they got 32 offers over Memorial Day weekend, and it actually went way above asking as well. So it looks like the Chicagoland area or the suburbs are doing pretty darn good. I'm not going to give you my address, but once their house sells, I'll try to show you the prices they got because I don't even know what they got for it. So that's, let me get to that in a second, what I think's going to happen. I'll give you a kind of a short-term, long-term, and mid-term view on all that. Statler, thanks. We had my daughter's wedding over the weekend. It was fantastic. Our weather was like 75 degrees. It was little overcast, but that was nice because you weren't sweating and glaring, and it was perfect because all the plants and everything were, it was perfect. Now we probably like you guys, you get rain all the way through, May, and then you don't have rain again until September, October. So we go from that to a drought, basically. Let's get over to here. Anything else? Let's go. We got a lot of questions today, so thanks for joining me. Good morning, Dan. We have some new news today, brother. I'm personally 70 days out from my rate lock on a new construction loan. Okay, so here's what we got. Let me go to you guys because that's going to be a lot of questions. So, John, you joined me early, so let's get over to what my thoughts are. Would I be locking or floating right now? If I'm a home buyer, if I'm looking to build, and I'm looking to, I married the house, but I dated that rate. So now what do I do? Okay, I didn't want to get to this soon, but let's get over to it. So here's my thoughts on this. We're going to watch oil. We're going to watch oil, and that's all we're going to watch right now. All the other data can come in fantastic. You're seeing the Dow Jones hitting record, NASDAQ, S&P, everything hitting records, but you see these rates that keep going up as well. So here's what I'm doing with my clients. If you get a contract in now, we're locking you. We're locking you in, okay? But we're not going to play the game because just today, there's really, the markets were good going along. Now we're down 45. This is even getting worse than where it was. And again, you guys know how this works. So this is why I'm locking my clients in. If you get a house under contract, we're locking you in. Because I think one day last week, rates went up or down one way or another, 1/8%. That's a huge move. Now, if you're looking to buy, like some of the people who are looking to buy my neighbor's house, if you're looking to buy now that summer's here and your kids are out of school and, now you got that time, leisure time on the weekends. Yeah, sure. If you got kids in soccer and that, you don't. But now you have that time to actually look and move because the kids are out of school. What I do, I wouldn't freak out, but it is concerning. So my recommendations are making sure that when you get pre-approved, and I can help you with that. I'm licensed in all 50 states as well as Puerto Rico. We're going to give you quotes of almost 40 different lenders. So what I'm doing is I'm saying, okay, when we get you pre-approved, not pre-qualified, pre-approved, we're going to increase your rate by at least 1/4 to 3/8. And then you might say, why? I'm already struggling with those payments. Well, that's why. If you're struggling at a rate at 6 1/4, well, maybe you can't afford a house at 6.5 or 6.75. It just isn't in the cards. I don't want you getting into a house that you get foreclosed on. So maybe put off that timing. Maybe reduce your prices down a little bit because in the future, your taxes are going to go up. Your insurance is going to go up. And hopefully your wages still go up to compensate for that, but they might not. So don't be house poor out of the beginning, because you're going to have more cost than you think. So when you're trying to get pre-approved, please get pre-approved at a rate at least a quarter, 3/8 higher. Okay, so that's what I would recommend. Should you be freaking out, even if you're looking to build and it won't be ready until December? Well, here's what I'm saying. Follow oil. I didn't even think this Iranian conflict would go this long. I figured it would be weeks, and now we're into what, second or third, probably the third month. That's not good news. Okay, so you're going to see mortgage rates staying here and higher for longer. So kind of let's get over to some tools I can give you, because I don't want to come in here and say, okay, the world's ending and all this other stuff. I want to give you tools to help you, because you're looking to buy a house or you're stuck in a rate that you just need a little bit of reprieve there. I'll give you some tools to help you out. So the first thing is, let's just go over to here, and then we're going to go back and I'm going to answer the rest of the questions, and then we'll go back to the chart to see where that thing is going to end, or at least begin the day for now. So I have a store, and you're not to buy anything. Everything is 100% free for you. Yeah, it's 100% free. Down below, you're going to see a thing that says Stand Store, where it's going to give you calculators, how much can you afford, things like that. Go to the store. It's all free. Okay, it might say download or get now or whatever. Just click it, put in your email address. It'll dump right on your system. Here's what we just put in right through here. Get your mortgage buyer qualify. What you're going to do is you're going to go by this step by step. We're not asking you any questions. I don't want to gather your data. I want you to put all your information into this, and then it's going to basically tell you, here's the programs you qualify for. Here's how much you can afford. You can even track down what your true interest rate would be with some links we have in here. So what it's going to do is you're going to hit it. You know those Wednesday things where I used to post them up through here, and we do live events where I'd show you behind the scenes on how we do this. Now it's in your lap. You can go through that system, plug in your data. It's going to give you the exact rate that you qualify for. If you like it, click bam. You're going to reach out to me and my sales team. We'll reach out to you and we'll conclude these things. We have tons of calculators on there. So go to the store. You're going to enjoy those. And you can find all this on my website. So go to therateupdate.com right through here. Right through here is our main page. You're going to go through, there's a bunch of tools here. I'll go over those in a second. But if you want to try to follow me with rates and the news that we go over each day, just go right here, mortgage rates. Okay, click it. It's going to bring you right up to here. So let me explain this to you, because if you're a mortgage advisor, you're a realtor, you got to have this. It's free. Okay, but if you're a consumer out there saying, okay, Dan, why would I need to watch this? Well, let's look at this. Let's look at this website. I put it together, and it's free for you as well. You're going to go through here, and what do you look? If you're following me, you're trying to figure out what's going on. Mortgage rates, the economy, bond market, yields, all this other stuff. I can give you all to you in one thing, and it's right through here. Right through here, ISM Manufacturing PMI forecast, or came in at 54, actually 53. It's going to tell you here in a second, is this good news or bad news? But it's going to go down through here and give you all the rates from conventional, FHA, doesn't have USDA, but if you want a USDA rate, it's going to be right in between these two here. Okay, there's some tools up here. You can kind of choose the different formats you want to look at. Scroll down through here. It's going to give you the jumbo, the ARM rates and conventional 15-year. Now, here's where we get the juicy stuff. This is what we follow. Okay, this is the MBS market. Remember the chart that we followed up through there? This is it. It's delayed because we manually do this. Believe it, we manually do this because this thing, to tag this in on a live event, it's thousands of dollars a month to get that. So we're like, okay, we'll just purge this data from another system and keep uploading it. If you want to watch the 10-year Treasury, which we all have free access to, it's right through here. They basically follow each other, almost mirror each other. Then you go over to here, it's going to give you the breaking news of the day, and is it good or bad for rates? Okay, that's what it's going to tell you there. Then down through here, it's going to give you the trend. What does the trends for today mean? It's going to mean higher rates. It's going to tell you exactly why. Then you're going to go down through here. It's going to give you my most recent podcast. Check them out. Pretty cool. And then it's going to go down through here. Remember, these are all the things that we really look at. We look at the Dow Jones, the S&P, and the NASDAQ. What's a non-Cinderella story today? And here's what I call a non-Cinderella story. If you got money in the stock market, you probably bought like NVIDIA stock and you hope it goes up. You realize you can make money in the stock market with stock prices going down. You realize that one? That's called shorting. But here's what we got. We got the Dow Jones, the S&P, and the NASDAQ all down. We got oil up. We got the VIX up at 16, up 5%. What VIX is, think of this as the blood pressure or the anxiety level on Wall Street. 12 is calm. When you get close to 20, it's getting nervous. And when you hit 20 and 30 and 40, this is you triggered that thing. So we want this to stay, peak around 16, 17. That's anxiety enough. We watch Bitcoin over through here just to kind of give me the risk tolerance on Wall Street. Then we go down through here. This is going to give you the federal funds rate and all the information that we follow on the Fed. Then we go down through here with the predictions market and tell you what Kalshi and Polymarket is going to tell you about. Is the Federal Reserve going to cut at the next meeting? They're surely not going to raise. Well, this will tell you what's going on with that thing over there. So let's get to the rest of the questions. So hopefully I answered your question on that. Should you be locking or floating? Sorry, that was a whole dissertation on that thing, but hopefully now you understand what I would be advising my clients to do. Audio sounds good. I only have one earbud in though. Okay, so I should have this down there. So Statler, thanks for joining me, man. I'm glad you're here today. Just me and you. Just call me after the show. It's just me and you. I mean, oil. Let's see we'll post it on the board here. Please join us in, folks. Any questions you guys have, I'll show. I'll go back to the chart here in a second. That's what we really need to focus in on. There was a big gap today that I thought was going to be filled in a good way, and it wasn't. So let's get to the rates, and then I'll answer your questions. I mean, oil got a gap up, right? All things expert predict 150, 200. If there's a prolonged, I would think the same thing. You know, I'm thinking, okay, when oil only hit like 120, 116 range, I'm like, this is a gift. Because if you have the Strait of Hormuz shut down, there's no oil getting around. I thought this would easily go to $200 a barrel. That's why a lot of people, when they were watching me, they're like, you know, you're crazy when you're like, hey, $100 a barrel, I'll take it. Well, my thought was $180, $200 a barrel, very short term, but we didn't get there. Just think of what we went through. And it's prolonged now, what, 3 months? And we still have the Dow Jones. It hit a record high last week. So it's a head scratcher. So I'm in even uncharted territories that I know of, and I've been doing this for 40 years. That's why I try to come in and say, you know, all these guys that give you predictions and stuff like that, I have no problem telling you guys, I don't know. But let's work on this together. We'll focus in on here because I don't want to give you bad information. I mean, look about the house crashers. Let's get to that. Let's get to that headline that we got over through here. So let's get back to these things. Iran stopped negotiations. That's what's really crushing the market this morning. I'll show you that gap. And right through here, let's get to this piece of the puzzle. Okay, so we have home prices or new home sales just crumbling. Okay, and a lot of the home crashers are saying, I told you. Well, the bad thing is with that, I told you that a lot of the sales were going to be bad, and I've been telling you that for years. But the culprit or the bad news here is, oh, shoot, it's not in this one. It's up 2.2% year over year in prices. So, yeah, homes aren't selling just like they didn't sell last year and just like they didn't sell the year before, but they're not crashing in value. So I try to come in here each day to give you the facts behind this. And if I don't know, I'm happy to tell you I don't know because like the home crashers, don't buy, don't buy, don't buy. Well, if you sat on the sidelines, unless you're in Austin or little parts of Florida or things like that, your home price is probably up. And you would have been able to refinance a few months ago at 5.99, putting yourself in the catbird seat. So home prices are up. We got mortgage rates that stink. I agree with you. And so what's going on? Well, let me give you some guidance here. If you need some help with this, if you're a homeowner right now, go to our website, and here's a whole bunch of tools that we have, like I said. But I want you to do one thing. We got a tool right through here. It says RateWatch 2.2. I don't know if you saw that. My apologies. Go to our website. It says RateWatch 2.2. This is for homeowners out there. So if you own a house and you're trying to say, okay, Dan, when rates come down, please let me know so I can refinance. Plug in your information in here. We don't sell it. I'll track your mortgage rate and your payment. Let me know when your payment, your savings gets to $200 a month. We'll call you, text you. Goes to 300, we'll email you. Goes to 500, I'll probably drive to your house. So no, I'm just kidding. But that's what these things do. And then also go over to our resources, and you're going to get a whole bunch of things here. Go to blogs. This thing's pretty cool. I usually post our shows on here or other things. You realize car prices, you want to talk unaffordable? Home or car prices just was launched on Friday. The average car loan is $50,000 and the average payment is over $700. Let me know if that's what you're paying down below. But let's get over here. So let's see what we've got with some more questions. I'll do coffee bet, but rate hikes within 2026. They won't do it next. They won't do it at next Fed meeting. My thing is they're not going to do anything until the war's over. Once the war's over, give it 1 or 2 months. They'll be able to track the inflation. We're going to watch the PCE and the core PCE as it starts to topple. As soon as you see that the reading starting to come down, they're going to cut. Okay, so that's my expectations. When it's going to be, whenever this war's over, that's kind of when it's going to be. So I'll send me an email if you would, Statler. It's dan@therateupdate.com. I'll answer any other questions you got there, and we'll clarify our bet on that as well. We're not going to end soon. I think we might have got that. Let's see. We're not going to end soon. President at Iran resigned. I know. That's what I saw this weekend. So let's see what else we got. I'm getting conflicted reports on oil reserves. Heard they would be running out by June. You know what? That one is tough because every day you hear those reports. But I've been showing on the economic calendar. A lot of times they will give us. They might have given it to us last year. Right here. Crude oil inventories. They give us to us all the time. These absolutely don't make any sense. Like one reading will be plus 7 million, and the next reading will be minus 3 million, and you'll have oil prices go down. So I don't really see a huge correlation there for some reason. Right now, it's just predicated on what Iran and the Strait of Hormuz is doing. But fantastic thoughts on that. So anything else that we might have? Let me make sure I covered everything for you guys today. If you have some questions while we're finishing up, let me know. Tomorrow we're going to get the Federal Reserve Kashkari. He's going to speak. He used to be kind of on the border. Right now, he's a proponent of we're not going to cut until we really see inflation coming down. I'm going to have to agree with him on that. And then we're going to have the JOLT index that'll come out right tomorrow morning at our opening bell. This is job openings and labor transfers. So we got that as well. So do we cover everything for today? Let me sure I got through my agenda. Home sales down 11%, prices up 2%. Face value went through the bond market, oil prices up, core inflation, what to do. I think we covered it for today. Folks, we will be starting a new kind of format next week. We have a studio. Yeah, believe it or not, we're finally upgrading some things. We're going to actually have a studio. We're going to do a live events Monday, Wednesday, and Friday like this. We're also on Tuesdays and Thursdays. We're going to post out videos in regards to mortgages and products placements and things that you can really understand if you're looking to buy or build a house. You know, what programs are available for you and those things. And then once a week, we're going to come out with a fantastic video for you guys to see and just understand pieces of the market. So continue to join me. Subscribe over there to make sure you don't miss any of those things. So I wanted to talk about that. Other than that, what do we have? Oh, huge this was out this morning. People are fleeing New York. Those big corporations are saying, okay, if you're going to try to keep taxing us, we're going to move. Well, they're starting to move now. So the report just came out and it was breaking news this morning. Companies leaving New York, out of about 800 of them, 111 went to Dallas, 88 went to Austin, and 31 went to Houston over the past year. So there was over 800 companies moving out of New York to a little bit tax-friendlier areas. So just a food for thought over there. So let's go back and see where we end the day with the chart down 44. This isn't good. So let's get to a 2-day chart. I just want to show you the gap. Here's the gap. Every time the market opens, it usually kind of flows through. But you might every once in a while get what this is. One day it closes and one day opens. This is a huge gap below. See it down through there? Okay, but usually it fills. Many times it fills. So as the day progressed, I'm like, okay, this is good news. And then all of a sudden it just fell off a cliff. This is when the media came out and said, okay, Iran said, no more negotiations. We're closing the Strait of Hormuz. And this is going to get wild, folks. So don't forget to subscribe and join me over there each day so I can explain to you guys what's going on with these things. But if you look at a 5-day chart, this is pretty good, but this is bringing back rates all the way. So let's go back to what we started at the beginning. Remember when I explained to you guys how this chart works? Now you know a little bit more on how this bond market works. So if the prices as they go up, that's fantastic news. We're high-fiving, but this is a massive move today. It's almost down 50 ticks. It means mortgage rates are going to go up at least 0.1%. So don't be surprised if you're seeing rates teetering almost at 6.75 once again. So what should you do? Subscribe over there and make sure if you're a homeowner, put in your information. If you're looking to buy that first house or even looking to build, realize we have a one-time close for those builders out there. So if you need any help, folks, join me each day. And then also go over to our website, therateupdate.com, and there is a ton of information here that we want to help you guys. Not give you all the bad news and the good news, but I want to give you tools to help you guys manage real estate. So any other last-minute questions? Let's see. Statler, stocks are flat. They were green When I started prepping for the video, all the indices were green and then they plummeted from there. So think the real bet is done by. Think the real bet. That's it. Think the real bet is don't buy a house. Pour your money into the stock market. It won't go down. Yeah, you're gonna have to leave there. So, like I said, I'm not a pusher of everybody needs that buy a house or own a house. I don't feel that way. I actually don't feel that way. So if you're looking to buy a house and you need some guidance on the financial side of the equation, those are the ones I'm looking to help. If you already bought that house and you're trying to, okay, I married the house and dated the rate, need some help there, I'd love to help you as well. So don't forget to go to our stand store. Everything is free. Nothing. We don't charge you for anything on this site. And it goes down through here to give you your true mortgage payment. If you go to those calculators and you plug on all your information in and it just like, you're like, oh, okay, well, now they need all my information so they can call me. I just want to provide you the information through. So check out all these apps through here. We're adding to them weekly. I did take some down because they just weren't working. So we're going to customize those and post them back up through here. So if there's no other questions, folks, thank you so much for joining me today. The bad news is Iranian stops negotiations. Oil prices are jumping. That means mortgage rates are going to pop as well. So God bless you. Thank you so much for watching. Again, my name is Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer, licensed in all 50 states as well as Puerto Rico. If you need a mortgage, I'd love to help you out. God bless. Thank you so much for watching. And join me tomorrow. We'll be live again at 9 o'clock. Starting next week, we're going to change up our schedule a little.